Bitcoin is unique, for a lot of reasons, but one of the most fascinating is this: there will only ever be 21 million coins. It's a number hard-coded into the system, and once we hit it, no more mining new Bitcoin. But what does that actually mean for the future of Bitcoin, for miners, and for everyday users? Let's break it all down, clearly and simply. First things first, as I've said earlier, Bitcoin has a hard cap of 21 million coins. It's built into the code and can't be changed without massive consensus. As of now, over 19.7 million BTC have already been mined. That means we're getting closer to the limit. But here's the twist: Bitcoin mining slows down over time due to a process called the halving, where block rewards are cut in half roughly every 4 years. At this rate, the final Bitcoin is expected to be mined around the year 2140. So, what happens to miners when there are no more rewards to earn? The answer? They'll still have an incentive to keep the network secure, which are transaction fees. Right now, miners earn both block rewards and transaction fees. Once the block rewards disappear, fees will become the main source of income. And if Bitcoin's network stays active and valuable, those fees could still be worth it. But wait, without block rewards, will the network still be secure? Yes, if enough people are using Bitcoin and paying fees, miners will stay motivated to validate transactions and secure the blockchain. It's the same concept that keeps payment processors like Visa going, which is volume. Plus, improvements in Bitcoin's technology, like the Lightning Network, can help reduce congestion and optimize fees, keeping things smooth. Here's where it gets interesting. A fixed supply of 21 million means scarcity. If demand continues to grow while supply stays the same, basic economics tells us that price could go up. That's why some investors see Bitcoin as digital gold. And with global uncertainty, inflation concerns, and growing adoption, Bitcoin could become an even more attractive store of value over time. So what does this all mean for you as an investor? 1. Bitcoin won't suddenly stop working after 2140. 2. It'll keep running on transaction fees. And 3. It may even become more valuable due to scarcity. This long-term outlook is exactly why many people see Bitcoin as more than just a digital currency. It's a long-term asset. And that's a wrap. Thanks for watching. If you found this helpful, give us a like, subscribe to our channel, and let us know in the comments, do you think Bitcoin will still be relevant in 2140?